just wrote today, where he talks about the various crises and how things take time to resolve themselves. Even though there might be some kind of a thing that looks like you ought to have an instant solution, it takes time for a trend, time for a situation to kind of take effect, and it may go through the end of the quarter before you would have a turn. I think he said they indicated that the interest rate peaked to bottom usually lasts about, he was using interest rates for his example, it usually lasts about 18 months, but you have to let it play out before you can expect the overall market to be able to turn on what you think it should turn when you look at your other indicators. As I say, you have to have your market in tune with the conditions that you have that are available. And then you need to have some early clues, some early detection method, whether it's vantage points, breakouts of the predicted highs and lows, or some other means. You have to have some way to detect that breakout fairly early to get on board, and you need to find reliable indicators that are reliable and consistent. And then they also should give you some logical places at which to act. At what point will you buy? What point will you sell? What point will you exit when the market doesn't go your way? You know, when the trend fails and it doesn't happen, you know, as happens quite often, you have to find a way to get out, keep your losses short, and that's the point of emphasis in almost all of my webinars that I try to wind up with, is that you must be able to manage your risk, minimize risk. You can't let a trade get out of hand and don't want to take a big chance. That's why you want to take an amount that you can afford to trade. If it doesn't work, then get out, take your loss, because you can always move on to the next opportunity. I think losing small is probably as important for successful trading as winning big is. So, you know, keep all of those factors in mind as you're looking for trends and how to trade them. Don't know if that answers everybody's questions about trend trading. If you do have some questions, you can ask them now. Try to talk about anything related to strategy. If you have questions about Vantage Point, you probably should call that information that you see on that number you see on your screen there. They can tell you a lot more about Vantage Point and specific indicators that are available and what they say and so forth than what I can. You know, I just happen to use it for my tool. They can explain more details to you. Okay, question here. What criteria using Vantage Point do you cancel standing order to enter? For example, it looks like entry isn't happening. I really don't have a time frame. I don't like to have orders sitting there like as a stop, for example, during the, you know, if I say I'm trading on the stop, you know, that's just during the most active period of the day. For example, if you're in stocks or stock indexes, that would be during the daytime. I don't like to have a stop sitting out there during the middle of the night when I'm not watching it, because lots of things can happen, you know, that will happen. But there's a possibility from day to day, as I say, with Vantage Point being an end-of-day type of software, and you have to download it. My download is not completed until 5:30 Central Time, and where you have a you know, situation where you have to wait till you get that data before you know actually what your predicted next day high or predicted next day low will be. You know, so you do have to wait for that, and you do have to, in my opinion, would have to kind of come back the next day, and if you have a signal that you says buy and you can see that you're 20 points above the predicted high and you want to buy at 40 points above, then during that day, then you would re-enter the order and take advantage if that market does move up to that point. Now, you will miss some trades. Probably that market sometimes is going to go through what you think where you think you're going to enter. So just, you know, flat looking at a candle is not going to tell you that you're in or not, because sometimes the market will move when you're not there and when your order isn't there. But it's, you know, probably better to be a little safe than it is to be sorry. So I think I don't know that I would just pretty much use the you know, the situation where I would enter the order on the day during the active period of the day where I have a chance to watch it a little bit. Once a trend gets going and it is moving along, and I don't have to be so worried, you know, that early stage is the critical stage, and once it kind of gets out of that and kind of gets off on its own, then I think you can just kind of keep your stops below the predicted low if it's in an uptrend, and don't have to worry about it as much. I don't think then you have to go back and forth and you know, enter it every you know, back and forth, and just leave it sit there and let it come back down to it if it wants to, and you're stopped out. then you're stopped out. But you know, I guess that's the way I would handle it. I don't know if that answers the question thoroughly or if it's a too long an answer, but that's kind of the way I would look at it. Ever use predicted high or predicted low on pullbacks to continue to enter? Yes, that's part of the intraday trading strategy. I didn't get into that today. That's another webinar of itself. But yes, you can fade the predicted high, fade the predicted low, and enter on when the market, you know, let's say the market opens in the middle of the predicted high, predicted low during that range, moves down to the predicted low or towards it. You can fade that predicted low by a few points with a limit order, get on board, or you can let the market get to its low. If it goes on below that, you know, ignore the whole thing. But then if the market starts to come back and goes back up through where it opened, you know, kind of the oops type trade, then you can buy where it, you know, at that open price, and then use that as an entry point. I think that's probably a little less risk in a lot of cases than if you just simply put a number out there and say that you'd like to be long or short at a given point. Okay, looks like I've pretty much exhausted all the time that is available to me. If you have other questions that you would like to have answered, you know, as Darrell mentioned earlier, you know, send them in because we can direct webinars to that. We have a number of webinars that are on the TraderPlanet.com website that are available, and including the one I mentioned on intraday trading, and a little bit more strategies there, some on swing trading and other topics. So you can see those in the archives and you know, refer to those as possible help. And then we'll be doing other webinars in the future, of course, and so those opinions, questions that you have will be very helpful in determining what the content of those should be. So if there are no other questions, I do thank you for attending today's webinar and look forward to having you at future webinars. Darla, back to you.
Thank you, Darrell. The recording for this webcast will be posted on Trader Planet within the next 24 hours, and we will be emailing the link for the recording to you. If you are interested in seeking further information on Vantage Point Intermarket Analysis software, we urge you to contact our friends at Market Technologies, the makers of Vantage Point, via the phone number on your screen. This concludes today's presentation. Thank you for attending, and all of us here at Trader Planet wish you a pleasant evening.